That doesn't mean that people will roll in here for a few minutes.
Okay.
Hi, everyone. Thanks for joining us. This is the last week in mortgage today. We're going to give it just like 30 seconds or so and let some people roll in before we officially get started here. So Thanksgivings, you guys had great Thanksgivings, lots of turkey.
Yeah.
Lots of turkey coma, food coma.
I finally ate the last of it yesterday.
So it's officially out of the house.
Yes.
And it has been in every form of soup and sandwich and
Everything.
Right?
I was so happy it was gone.
that's fantastic.
It's like the Christmas story. Turkey cacciatore, turkey sandwiches, turkey stuffing, turkey, turkey.
Yeah, exactly. Well, I think we'll go ahead and get going here. This is the last week in mortgage today. I'm Faith Howard Mooney, VP of Member Engagement at the Mortgage Collaborative. And I have two of my favorite ladies here with me today. So this should be a lot of fun. I'd first like to introduce Susan Shaffer. She is the VP of National Accounts Manager. I'm having problems speaking at National MI. Thanks for doing this with us, Susan. You want to share just a few minutes about who National MI is?
Sure. Thank you, Faith. Hi, everybody. So there's too many nationals in the title and in the company name. We got to do something about that. So I'm essentially in sales. I work on our national accounts team. I've been here at National MI for 11 years, going on 12 years next year. And I used to be in field sales and worked on the Mid-Atlantic team, and I've been in national accounts since 2021. So I love my TMC family and all the customers. National MI is one of the 3 MI companies that's a preferred partner, and we love being here with you guys. So thanks for having me today.
Well, thanks for doing this. And for those of you who don't or didn't know Susan before this, you should get to know her. She's a great resource in the industry to have and lots of fun to be around at the same time. And I could probably say the exact same thing for Angel Duke, who is also joining us, who is the SVP of Product Development at New American Mortgage. So thanks for joining. Let's say a couple of things about New American
Funding. So.
Why do I always say mortgage, and I know it's funding because that's your email extension even. I'm so sorry.
That's okay. It happens all the time. Everybody says that. So yeah, I'm at New American Funding. We're based out of California, Southern California, actually, although we do lend nationally. So we're across the country. I do product development from mortgage loan product development, not to be confused with the technology side of product development. I've been involved in the Mortgage Collaborative for many years, so you guys have probably seen me around. I love the Mortgage Collaborative. Nothing I wouldn't do for you guys. So I'm just happy to be here. Hope everybody had a great Thanksgiving, and let's get underway.
Yeah, let's go then. Thanks. I think we'll start out by talking just a little bit about some things that are happening in the housing market. And always, like, you both have, been surrounded by a lot of people in the mortgage industry. So, and Susan, I know you're out there in front of people all the time. So we just kind of love to hear what you're hearing. But it was announced this week that the median single family housing price is $409,300, which is a lot. I mean, housing prices have definitely escalated. Average sales price, $487,000. And I just wondered whether, I know, Susan, you are in Ohio.
Well, close. I'm in Pittsburgh in Western PA, so not far from Ohio. Yeah.
Yeah. And are you seeing that similar escalation, where you're at?
Probably not to that degree in southwestern PA, which is the Pittsburgh region. And I'm not far from Cleveland, Ohio. So where I live, I can be in Cleveland in less than 2 hours, and both markets are very similar demographics, and I would say definitely similar in home prices. So I would say the average home price here is definitely lower than that 400, what was it, 409, 300.
Yep.
It's always been a very affordable area to live, and Pittsburgh and Cleveland in particular often make lists of those markets that have great affordable housing. And by the same token, it's always meant that we've never seen huge swings in values either up or down. So it's been stable. And I would say that while definitely there's an inventory issue here, like everywhere else, but it's still a more affordable area than a lot of the metropolitan cities, that's for sure.
Yeah. And Angel, how about you? What are you seeing and hearing out there? And Tony Bramley just popped in to say Texas used to be that way, but not anymore. Yeah, you've had a huge influx of people into the Texas market.
Right. So, the company is based in Southern California, but we lend all over the US. I'm actually based in Alabama. So huge differential between those two. And when I talk to all of our loan officers, we do have pockets, as Susan was saying, there are pockets that are not seeing these major swings, but overall, I mean, we're hearing across the country the same thing everybody is feeling and seeing. There's a huge increase in pricing going on. It's felt across the nation. There's really not many pockets that are not feeling it because the inventory has been historically low, and so therefore there's a supply and demand. We all know this, and so that's the truth of the matter. As you know, Faith, at New American Funding, we have a huge initiative for the underserved. So we've been feeling this for quite some time. We've been in those trenches for a while. The housing and finance authorities are feeling the pressure. Loans are flocking to them, and many of them are running out of money. They can't take on any new lenders. The report is on point 100% from what we've been feeling and seeing happening in real life. And I wish we had better answers for all of those things, but the report, it's on point.
Yeah. You kind of led us into like one of the next things that we were going to talk about, which was that inventory issue. So great segue into that. The weekly inventory change, which was November 17th to the 24th. So just, like less than a week or a little over a week ago, inventory fell from 569,898 to 565,875. The same time last year, it fell as well. 2023, the peak was 569,898. The bottom for 2022, to give some sort of comparison, was 240,194. So not a trajectory that's like in an upward mode at all. Active listings for this week in 2015, which takes us back, 8 years, 1,104,514. So like not quite double what they would be now. No easy solution in this particular place, but wondering if either one of you have seen like interesting things, I guess I would say, that you've heard of or that are happening to help supplement. Angel, anything that you're doing for or seeing where your initiative for new home buyers is having an impact on inventory specifically?
Unfortunately, from an inventory standpoint, we're not able to influence that as much. And it's unfortunately more of the same story that we've all heard for years, right? The affordability is the concern. Everybody agrees that it's affordability concerns, and yet nobody wants it in their backyard when proposals come forward. We have the same red tape that is there. We have the same blockades that are there. We have the same high cost of construction that is still there and rising. So unfortunately, I feel, from an industry standpoint, we're all still facing the same problems we've been talking about for years. We all identify them. We all know what they are. We have yet to solve for any of them. And even the best loan products that we can come up with, even the best outreaches that we can come up with, even the best counselings or educational programs or anything we can come up with still will not solve that inventory problem until there are needles moved in that sector.
Yeah, I agree. I heard NIMBY for the first time, the acronym NIMBY for the first time just about a month ago. I had never heard that before, but I'm like almost ashamed to say that I live in a part of the Twin Cities that was kind of known for not in my backyard, where it came from. And that has begun to change here. I've seen it change where we do have, I wouldn't say our housing is affordable because it isn't for being in suburbia, but at least there is multifamily and other options for other people. And townhomes, we were pretty much for a long period of time, only single family dwellings were being built. And so I have seen some of that change a little bit, but it's all new construction and the cost of it is like crazy. So Susan, I'm wondering whether you've seen, anything that is like that has kind of assisted in the markets that you support or with your lender members in that environment.
I wish that I could say we've seen programs that have made an impact. And when Angel was talking, I thought specifically about the special purpose credit programs that the agencies came out with. And they put a group of pilot lenders on them. I still don't think it's broadly available. They're still within certain lender segments and they are within certain MSAs. So we get those programs obviously because those are all loans that are subject to having MI on them. And when the lenders get that variance or whatever it might be, we review them. And I'm happy to say that we've been aligned in approving all of them for the lenders, but we haven't seen a great deal of volume in those. And obviously I'm only speaking for one of 6 MI companies, but I bet you if the other 5 were secretly listening to this call, they may be shaking their head yes in agreement with me. I think that in concept, they're a good idea. However, the special purpose credit programs in particular, they're giving like this down payment assistance, but it's really not a significant. It's $500, $1,000, or $1,500. It's not a significant enough amount to really make an impact. And again, where is the homeowner finding that affordable house to begin with? So that's a huge issue. And in the builders, they're helping with inventory, but they're not necessarily helping with affordable housing because builders are typically not building. While we do work with some larger builders that are trying to build a first-time home buyer basic, not many bells and whistles, not a lot of customization. It's probably still at a price point much higher than your average first-time home buyer would be looking to do.
Right. That exact same thing that, and it's like they're kind of caught in the middle because it's really hard to build new construction right now and have it be affordable at the same time. I mean, just the cost of things. And one of the things that I was really shocked by that I landed on not too long ago is the cost of permits, even just to build something.
It's outrageous. It's
like,
outrageous.
Amount of money in some markets. It was what I was reading. I can't remember which market it was. It was over $30,000 just to permit a single family home. It's like, that's a good chunk of change for permitting. So one of the things kind of that has been talked about, and it's been talked about for a long time. I started out in mortgage in the relocation space, and this particularly was talked about in that space and has been ever since is portability of a mortgage is something that would long-term be a solution for people. I will say that FHFA has stated that it is not looking at exploring even the feasibility of portable mortgages, that it's considered kind of a fringe idea that is out there. It is present in other places outside the United States. And Angel, I know, you've been on the product side of things for like a long time and have a great interest and understanding of that. Have you heard anybody in your world kind of talking about portable mortgages mortgages moving with people as they move?
So it's funny. I've heard of it. I've heard of it for years, actually. It's been around for quite a long time over in some of the European countries. My family's from Europe. And so I actually heard about it for years. It actually it bubbled up before, right after the housing crisis, actually. It kind of bubbled up at that time. We heard about it a lot after the housing crisis. It kind of got some legs under it. There was a company, I can't remember the name of it now, that was starting to try to bring it into the US. It never really gained any traction, and it kind of went away again. I can see why there's some, pros and cons to it. I can see, the servicing value on it. I can see, why there's concerns about how do you hedge that? How do you understand what the true value is? Whether borrowers, actually stay in a loan for 30 years then at that time versus the average time of 7 or 10 or whatever we now have the new norm to be. I can see how there's all those things. But I can also see huge issues in our industry with it. I mean, let's be very frank and honest. We don't, as an industry, even do assumptions very well. We have companies who still haven't figured that out. And it's been a VA standard for as long as VA's been around. And we have people trying to figure that out right now because they've never done them and they don't know how to do them. And that's been around forever. So, I would love to see it come as an asset to people. But I don't know if it would be the same. I think that maybe here in the US, we may have to find a different way to do it because of the securitizations and the way that our market works. And I'm not a financial analyst to know what that looks like, but I could see we may have to have a different spin on it.
And there typically is a higher risk. I mean, because you're talking about a 30-year mortgage actually turning into a 30-year mortgage, right? I mean, not
Right.
that people finance a 30-year mortgage all the time, knowing that they're not going
to keep this. Yeah.
Yeah, or they're going to I mean, people are getting them now knowing that they're going to refinance at some point in time when the opportunity is out there. I think the difference is I used to be on the banking side of the business, and my client base was in Canada, which Canada has portable mortgages, but Canada also only has 6 banks. It's either 6 or 7 banks, the entire, in all of Canada. And their mortgages are different than ours. They're more like a car loan, I would say.
They are.
For us, they're more of a personal loan versus heavily dependent upon the collateral. The collateral isn't even analyzed in the same way that we would. And I think that they have had some success with that. There's so many things what I think about it that would have to change. I mean, what happens when somebody buys a new home, and is the new home more expensive than what the mortgage was for? That would need to be adjusted. Just all kinds of variables like that. Susan, I see you shaking your head over there. I'm just wondering what from you're in the MI space. Like when you read this and saw this, what was your instantaneous thought about some of those things, all of the things that would need to change? And
yeah, the first thing that I thought is, well, who's saying the MI is portable? Because that's something that all of the MI companies would have to get on board with. And there's a lot that goes into that. There's also title insurance, which is not my wheelhouse, but that's something that would not be portable either. And then ultimately I thought, and not to be a pessimist because I am an eternal optimist, but I did think by the time that something like this would become available and approved widely in our nation, we'd be back to an interest rate environment that didn't need this. So yeah, I just think it's there's a lot to be worked out. I mean, we've all been waiting for the adoption of the updated scoring models, right? So that within itself, that's one thing that I thought of. It's taken how long for the agencies, FHFA and the agencies, to say, we will now accept the Vantage score. And this is still yet TBD as to a date. So that was a thought too, that, I mean, we can't even get that together. How would, this is a whole other, huge, extensive, I think, project if it were to ever happen here.
Yeah, that was honestly, that was my initial thought, was just exactly what you just said. It's like, the Vantage score is now pushed out, what, 2 years into 2025, I think was the last date that I saw, into spring of 2025. And so it's like, if that takes that long, that's one component of looking, at a mortgage. What would something like this do? And I think, the places that they've had it and been successful with it, their financial structure is very different than what it is in
I would
the
have to think their foreclosure process is a lot different too.
Yeah.
Because that can't be the same. They're questioning whether they would even evaluate the collateral. So that within itself, it would be completely in left field for the way that we underwrite mortgages today.
Yeah, it's the difference in thinking about, like, your biggest liability, turning it like into your biggest asset. Well, if you're having problems meeting your payment or whatever, then it becomes a huge personal liability. That there's some safeguards to that now in our world, which on the other side of things, I don't think they have those similar safeguards in place, because it's deemed much more a personal loan than it is, backed by the collateral. So all things to think about. I see in the relocation space, I think it's like, it would be the perfect place to try to implement something, because you have backing of a company moving a person. And maybe, that would be a spot where people are moving every 3 years when they're on a certain career path. Maybe that's the place that, something like this belongs as a very specific product for people versus an overall, adaptation or change to the system. But I thought it was kind of interesting to talk about,
For sure.
and think about as well. It was one of the things that it came up. They would see it similar to, which only some of us on this call are old enough to remember, the savings and loan crisis back in the 80s and the 90s. It would be similar to a change of what happened then, going through a change like that again. So interesting to talk about. Not sure it has any, definitely doesn't have an immediate impact because of what the timing of some of those things would do to get approved and make a change. One of the things that I was reading about this week is like the psychological impacts of owning a home, and how people are tied. I think it was called having emotional equity in your house, and that being tied to the reason why some people maybe aren't moving along with that interest rate is post-pandemic. People are more attached to their homes than they ever have been before. I would just love to hear, like, your opinion of if you think that people feel for their homes like in that manner, and that is one of the reasons why people are kind of staying where they're at.
Well, I think probably post-pandemic is people spent so much more time at home, and to some degree still are. So it replaced a lot of the going out, the doing things. So you moved to areas or created a space or adjusted the space you already had to adjust to the new lifestyle. And I think a lot of people have adopted that, and that probably has led to some of that emotional attachment. But it was interesting when I was reading about this. We do some next gen and millennial reports with Kristen Messerly and First Home IQ, and in her Gen Z report, only it was like 30% of Gen Z even want to buy a house, because they don't see the long-term financial benefits of it yet. So, but I think that's an opportunity just of them needing educated on that. But that's my 2 cents. Angel, what do you think?
Well, I think you're right. And I think I can see how that could change by age and demographics on that. But you know, I would see that I agree with you that, you know, if you were home during COVID and all of that, you saw that as your safe space, you saw it as your protection, all those types of things. You got very attached to it. And then economically, let's be honest, a lot of people are spending more time at home because of economics. And they also don't see the opportunity to move like they did before. Um, Frankly, I said that to my husband. I said, I hope you like this house because we're not going anywhere. Can't afford to leave. So this is it. So I mean, there's a lot of people having those kind of conversations as well. So I mean, there's an emotional attachment, there's an economic attachment, and if you're younger, you may not have had those attachments yet. Where if you are older and you've gone through some of these trials and tribulations lately with COVID, with job changes, with spending more time at home, pouring money into those homes, like you just said, to accommodate what was going on, and then now you're facing these economic trials that could be, you know, stretching your paychecks more. I mean, you're trying to maybe stay home more, take care of that house more, make sure you're keeping it up more. Yeah, you're going to have more of an attachment to it.
Yeah, you have more invested. I think people have more invested. I mean, emotionally, yeah, probably, but they also physically, and they've done a lot of changing to their homes to adapt, as Susan said, to things that I think people just have a lot more. They have more time invested in things in their home currently. Still is the single most important way to build household wealth.
Generational wealth.
Generational wealth, yeah, for sure. The pre-pandemic, so this is before the pandemic, the median homeowner had 40% more household wealth than a renter. And so I would think that, at some point in time, I think for younger people, I think a lot of the milestones that we would have considered like the normal milestones, whether it be getting married and having children and those things, they're delayed. And so I would anticipate this to just kind of be another milestone that maybe happens for them a little bit later than some of the other things, because I do think that some of those other milestones kind of trigger maybe a little bit of a different mentality. In this study that was done, it was a study that was done by Fortune, or Fortune is the one that published the study. 9 in 10 people believe that owning a home is an integral part of the American dream. And I think where we see that really in a lot of instances, Angel, is in the clientele that you have always had at New American Funding, you're kind of built on helping people new into this environment, immigrants and other people in those situations get into a home. And it's one of the main reasons not that people in that population cite as their reason for wanting to come to America is the ability to own property, and not only own the property, but have the property protected by law, that right. Somebody cannot just come and take the property away from you. So I'm assuming that you probably have seen some of that, just with the clientele that your company supports.
Absolutely. I mean, we absolutely see that it's an ongoing drive and initiative, and it is true. I mean, that's the main reason that people come to the United States. I mean, as we go back to the portable mortgage tie-in, that's part of the reason some of those work in other countries. Those are, for lack of a better relation, they're almost like leaseholds from the government. And there's a differential there. My family leased their property, their houses from the government in the United Kingdom. So there's a completely different aspect going on when we talk about those things and why people come to the United States. You own that land, you own it here. We have very few leaseholds in the United States. So
I had friends that, it's been a while ago now, but they bought a home in Mexico, and they bought their home knowing that what they were signing did say that for certain circumstances, the government can come in and, with no questions being asked, take a hold of that vacation property that they owned. And that's just like a whole different mental kind of state, I think, for people to be in. Home ownership rate among foreign-born populations is really strong at over 50%. 66% for people that are native-born Americans. So it's like it's actually is pretty close. So I thought that was good news. We're at the bottom of the hour. You ladies are absolutely
Already?
delightful. I know.
I went quick.
It happened so quickly. Thank you everyone for joining us today. Great discussion about some of the things that are, on out in housing market. I appreciate you, Susan and Angel, for joining me today. It's always great to have you. Come back at any time that you want. Would love to have further conversation with both of you ladies. Appreciate you for everything that you do within our TMC family. So
Thanks
thank
for
you.
having me.
Likewise. Thank you.
See you next week, guys, at the same time, same place.
Okay.
Bye.
Bye.